Hey, welcome everybody. Hope everyone's doing well. Thought I'd do a live stream today, and I am going nuts with encoder software and everything else, trying to take stuff to another level. On the downside of that, it means I have to learn a whole bunch of new things, but I think we are successfully live. Please confirm too if you can hear me okay. So just test for that real quick. All right. All right, so there's a couple people in here already. What's up, LD and Mr. Kang? You got to tell me how to pronounce your name. The VO gets me every time. Can you spell it out? Wait to see if you hear me. All right, while you're typing, you brought up a question about Lucid Motors, and I saw this one pop today too. It's actually a private company, and but it's another SPAC. I mean, I don't know how many of these SPACs we can do in 1 year, but we're certainly pushing the limits. I was going to try to pull up, let's check out my new software here, see if I can transition. Wish me luck. Hopefully you guys can see that. This is the Lucid Air. Is there anything special about it? I'm not sure. $70,000, projected range of 406 miles. I don't know when this ends with the EV stuff, to be honest with you. So for me, it's not really a play that I would particularly be interested in, but I don't know the name of the SPAC. Let's see if we can find out. Lucid Motors merger. CCIV. All right, so let's see what that is. Churchill Capital. We'll do a 1 month chart. Looks like they probably announced this one on January 11th, and you're up into the 18s already, although falling some today. So I wish I could help you more on it. I can't keep track of these EVs. I'm not necessarily interested in them. I'll be honest. Like, I think, why, if I was going to buy one tomorrow, I would buy Tesla just because it's already established. But I don't really like, I miss the good run up on Tesla. I think everything else, you're pushing the limits a little bit in the short term as far as P ratios and everything, as well as EPS growth over the next couple years. However, maybe it's worth a shot. I guess it just depends on how much money you have. I don't have an extra $5,000 to throw into Lucid Motors because I have other goals in mind for that kind of money. So that's just me. I did buy a couple SPACs this year, most notably DraftKings, which worked out pretty well, but that was way back in summertime. And then right now I hold BFT, which is going to be PaySafe at some point. And that one's actually up a little bit today. It's fully trazamine, or whatever they call it. Let's see if I can get it so you can see. Fully trazamine. This one was hovering at 16 or so dollars, and I was watching it, and then I noticed it dipping under 15, and so I bought 100 shares. That's it. I bought 100 shares, and I said, if it goes under $10, I'll buy 100 more. And here we are at 17. They still haven't even updated when the go live date is. So it's sort of a wait and see. I'm kind of intrigued by PaySafe because they're actually the payment provider for DraftKings and Twitch, I believe, and as well as a couple other US-based gambling operations, and then a ton of Canada and European-based gambling operations. So it made a lot of sense for me. But in general, the SPAC phenomenon, I don't know. I think it's great if people are willing to jump in, and a lot of folks have made a lot of money. I do have a risky portion, so to speak, of my portfolio, but it will not be loaded with SPACs, I can tell you that. So, all right, let me take a look at the chat board. You guys gotta give me a second. Oh, okay, you're Andy. So thanks. That's a lot easier because it took me forever to try to figure that one out. LD, how you doing? Good to see you. It's not confirmed yet. It's just a rumor. So sounds like Danny is commenting about Lucid. He probably knows more than me. Thoughts on Baba? So I don't invest in Chinese stocks directly, but it is hard to argue the potential opportunity here, just from a guy who enjoys fundamental analysis like I do. Here's your, call it 6-month chart of Baba. And if I was more comfortable with Chinese stocks, I think that there's something here. I mean, you got an EPS of freaking just under $10. The P ratio is solid. Obviously, it's all negative news headlines, right? So it's just like I did the thing on Visa yesterday. It's all negative headlines, and people are freaking out, and that's exactly the time that you buy. So if you have intelligence on China, that you can just make sure that the sales of Alibaba are doing well and that the core fundamentals of the business are good, which I haven't read any reason that they wouldn't be, then I think buy an opportunity. I mean, this is what we wait for, is prices to go down. And in United States stocks, that's been non-existent over the past 3 or 4 months. So go for it. Why not? It's a gigantic mega cap. There's far worse things to invest in. All right. Any thoughts on Intel? So I'm glad you asked about Intel. I'm coming out with the Intel video in a day or two. And maybe you guys can comment, I was really flipping coins between AMD and Intel because the irony is right now that AMD was dropping and Intel was going up on the news of the new CEO. And I'm like, well, what's more intriguing? Is it Intel going up after, a year or two of bad news, or AMD dropping on that same news? What's more interesting? So, let me know if you have a preference between AMD and Intel. I think both companies are intriguing. I think, oddly, AMD might be the safer bet because they've already actually implemented the fundamentals for growth as far as their new technology. You can see they're up a little bit, but they were down today. 87.65 or something like that. And over the past month, look at that. January 11th, almost $100. And then, you've got a 10% or so discount on this one. Now, I say discount loosely because your PE ratio is still over 100, but I'm sure the forward PE, without boring you guys to death, I'm sure the forward PE is lower than that. And then on the Intel side, let's get this going. 6 months or so. Here's Intel. So, right around Christmas time, that was pretty low spot for Intel, and now you're up 10% or so. Woo, bless me. Sorry about that. $45 at the low, $58 at the high. So now it's like, is Intel starting to get overpriced? Well, really hard to say that when you're looking at some of these numbers. So I'm going to go in big on Intel unless you guys tell me that you would prefer AMD. All right, transitioning back. Let's see. Any thoughts on Baba? Tesla, wait for the earnings next week from Andy. I agree. I'm so excited for earnings. I know it's like nerdy, but I'm so excited for earnings. This week's lame because it's all banks, except for today, guys. Even if you're not interested in the stock, keep your eye open for Netflix, because what you'll see with Netflix is a lot about consumer behavior, right? A lot about streaming demand, a lot about subscription signups, particularly in America. So even if you hate Netflix for whatever reason, try to read an article about it, because they're going to give you little insights about how the consumer world is going. And that plays into the Christmas time period that we just had. So I, for one, am sort of excited about it. Then we go through a bunch of banks, and Intel's in here this week too, I believe on Thursday. Let me see something real quick. So there's a million good sites. Well, excuse me. There's a million sites that list earnings, and I always end up on StockTwit's little website for it, because I gotta scooch it in so you can see. They take the top stuff and bring it up here so you can see, and then if you click on it, you can go down the line. So I believe that you don't have to log in or anything. StockTwits is a weird website, but I do kind of go on there because there's a lot of sentiment that you can track. For purposes of this, though, we were looking for earnings. I mentioned Netflix, Procter & Gamble, United Health Group might be interesting if you want to hear insights on how the COVID world's going. Again, you don't have to like the stock to get into that. I think that's it for Wednesday. Then Thursday, fuel cell energy. So a ton of people are going to be interested in that one. Intel, IBM, Intuitive Surgical. This is a big ARC play, I believe. Don't quote me on it. CSX and Union Pacific are railroads. I think those are the big ones. But you basically have Netflix at 4, and then looking ahead to Thursday, before the bell on fuel cell, which will be good, after the bell on Intel, IBM, I don't follow that one very much. All right. That was a take on earnings. Sam Lee says, what about HD? Home Depot, I think that Home Depot is a long-term stock, absolutely, for sure, and I think that the future is very bright. I love their technology. Is it ready to pop right now? Well, let's take a look. It takes a lot to move Home Depot, I'll tell you that much. That is a big company. So if we go down, we just do 6 months, try to get a feel for where things were going. Looks like October highs. And you're down. I don't know, it looks like it popped a little bit coming out of January. But look at that, P ratio of 23, EPS of almost $12. You get a 2% dividend on today's price. I mean, for a long-term stock that you're not going to lose any sleep over, that's pretty impressive. I've always found them to be impressive. Take a look at the revenue estimates. So last year they ended at 1025. This year they go up about 10%. Next year they slow a little bit. But some of that growth, by the way, that you would see on Home Depot that you might have been expecting, don't forget they're a dividend stock, so everything slows down. I was going to try to show you the growth rate, but I can't get it to show up. I can't scroll any further down the screen. See if it'll go up a little bit. Bottom line, though, next 5 years is 8%, which isn't bad for as big as they are. but it's not enough to lend me to hold them as a standalone stock, not because it won't do well, but I'm trying to keep all my standalone stocks in sort of like a plus 10% growth ratio or growth projection over the next 5 years. So I inevitably have Home Depot exposure in my ETF portfolio, which is in my retirement account. So anything that is, IYC I'm big on, which is consumer, and some of the other consumer stocks, I would have Home Depot in there, and certainly a big fan of it. All right, let's look at skills. Danny mentioned skills. I almost did a video on skills, but I didn't want to go overboard on SPACs on this channel because it's just not, I don't buy a ton of them, and it's not, I don't want to be the YouTuber that talks about stuff that I don't invest in. But skills is interesting. I don't know how much of it is pump and dump and how much of it is real, but if you guys want to look it up one day, they do, they basically are a platform for mobile gaming that allow, pretty much novices to make mobile games in an efficient manner and monetize them and promote them. So it's a great concept in theory. I've reached my SPAC limit for the year, and I think skills is in that game, so I just passed for now. Well worth reading about, though, I will say. Should I buy VIXI? I don't even know what, I assume VIXI is something to do with the VIX. Oh yeah, it's like a leveraged VIX call or something. Why not? It just depends on how much money you have. I mean, are we not going to ever dip again? Is that what's going on? I come to the computer every day and I'm like, today's going to be the day, right? And I'm not talking about people crying and going bankrupt, guys. I don't want that. But I certainly wouldn't mind a 10%, 15%. I was thinking that heading into this inauguration week, because the political environment has been so bad that people would be nervous about the inauguration, or Trump would do something crazy in his last day in office. And I was like, maybe this happens this week. But so far, at least on the home pages that I look at, everything's up. Here's today, if you're rooting for a dip. Dow up 0.91%. That's Dow 30, who cares? NASDAQ plus 1.5%. Russell 2000 small caps plus 1.2%. Oil, plus 1%. So I don't know. Why? Why is it up? And that's what's hard for me to understand. And not that I'm the greatest economic mind of all time, but it just feels risky in terms of buying a new position today and hoping that it goes up over the next, call it 2 or 3 months, right? Nobody wants to buy a stock today and see it go down. Even if you're holding it long term, you don't want to lose 10, 15% the day after you buy it. So that's where I always find myself in a jam, is looking for little opportunities to get in where I can just feel good that there's way more upside than downside. And that's hard to see right now, in my opinion. All right, what else do we got here? LD, thoughts on Rocket? Yeah, the news continues. So you're right, JP Morgan came out with a big downgrade today saying that they did not see, they saw a combination of competition in the market, lowering the amount of money Rocket would make off of each loan. Now, nobody calls me for stock advice, right? And a million people watch JP Morgan, so I don't want to be too much of an ass and contradict them. But I'm surprised. I'm surprised, and as I've told you guys numerous times on this channel, I'm not Super pumped about Rocket in the next 30 to 45-ish days. But I think when spring, summer, housing season comes around, that it's golden. It's not going to go to $100, but there's an easy $30 in it. That's my take. Did they announce their freaking earnings report yet? It has been, and I think LD called it out last time, it has been silence over there. Just going to bring this up real quick. See if Yahoo has an earnings date. Nope, still no earnings date. So they have been quiet. And that can be a lot of things. That doesn't necessarily mean a bad thing. But I certainly wish they would put that on the board at some point. It's looking like if you take November 10th, you got to figure Valentine's Day, right? So 3 months from their last earnings date is about Valentine's Day, February 10th. I can't wait to read what they put out, because what everybody's been saying, we talked about this last time, everybody's been pushing off their targets on earnings because of COVID, and it's too hard to read the business, blah, 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 blah. But now people are going to have to read the business. And I think Netflix will kick things off today. They need to come out and say, here's what we think for the full year. And if not, if everybody keeps bagging on that question, the stock market is going to go down, not crash, but the uncertainty factors will continue to go up, and that always spooks everybody. So Rocket, hold if you can. As long as you can afford to hold, I would wait till earnings, but I certainly sympathize with everyone who bails on it, because it's been flat. I'm giving it probably a couple years, to be honest with you. So, all right. Let's see. I like both. CRM, Salesforce. I need to do a Salesforce video, but the last I checked, you did have a potential buying in there. I think did we talk about this on the last video or the last live stream? Yeah, so down, here's your 6-monther. Here is Thanksgiving, 260. You're down to 216. So if you're long term, you have to like that. On the analyst side of the coin, though, this is your big one. We are in fiscal year 2021, EPS estimate of 464. Next year, I don't know what their official fiscal calendar is, but next year, they're saying we're already in fiscal 2021. Look at that. Going from 464 to $3.50. That doesn't mean it's a bad company, but it does kind of, I would need to research that more if I was in CRM. Why did we go from a $3 EPS in 2020 fiscal year, expected to go to 464 this year, then back down to 350? And furthermore, if we go to revenue, why did they get $17 billion in 20? Then they're supposed to hit $21 billion this year, and next year's about the same, right? Plus $4 billion, plus $4 billion, plus $4 billion, yet the average analyst is seeing EPS. So there's a story in there. Just for fun, let's look at what TipRanks says. Ugh, I put it in the wrong search bar. Sorry. Here we go. All right. I always ignore this first number here because it is all the analysts' opinions. And as you guys know, if you watch, I try to go down to the fresh ones. And if we use fresh as in a month ago, you have all buys. 8 days ago, a hold came out from Piper Sandler. Then you had a buy come out yesterday at 260. So a couple mixed messages in here, and I would just try to get to the bottom of it. And it looks like, oh, here we go. Piper Sandler cut his rating on Salesforce to neutral while keeping his 242 price target. His view is that this hungry hippo needs time to digest two of its largest acquisitions, Tableau and Slack. He notes that the amount of stock issued in the two deals combined increases the number of shares by 194 million or 24%. So there you go. That is why some people are feeling the way they do. They want to see those acquisitions get on the books. And it's also probably, that's probably why we see EPS dipping down a whole dollar in 22, because the expenses of running Tableau and Slack and likely the compensation package will hit next year. So revenue will go up, EPS will go down. This is guesstimate, by the way. And that's probably because it's going to cost so much to integrate those companies. But I think that was a decent explanation we saw on the last screen. The number of shares going up 24% is always going to spook people. So just doing that 1 second research, I would say that Salesforce long-term opportunity is here. You know, buy the dip if you are managing your cost basis or you're intrigued by the company for the future. However, it looks like in the short term, it could be, you know, a little up and down unless they start developing outsized revenue with these acquisitions, right? That would sort of change the game, but we'll have to see how that goes. CRM, Roku for A, B, C, D, E, F, G. Roku, I love. Every time I think that it's too expensive, it goes up more. So I don't know what to say. I got Roku. I have 3 Roku TVs at my house. The TCL brand, by the way, there's no affiliate links here, but the TCL brand that they sell at Best Buy and Target, and I think Walmart too. If you're looking for a TV, those are technically cheap, right? They're kind of bargain brand or whatever. They're awesome. They're absolutely awesome. And I've had one of my TCLs for 4 years now and never had a problem. So I'd get nothing out of promoting that to you. But if you like Roku and you're looking for a TV, get the TCL, save $100, and you'll be super happy, in my opinion. All right. Thoughts on Facebook today at 260. Go see my Facebook video. I just did a big thing on that. I won't bore everybody. I think it's a buy. I think it's a long-term buy. I mean, all the fundamentals on that stock are outstanding, and the only catch right now is negative headlines, which, you know, those will overcome themselves. I believe they have $50 billion in cash, so they can buy their way out of a lot of sticky situations. Just going down the line here, guys. Folks, if you like Facebook and Twitter, go for social ETF. I haven't looked at that one, but it's a good call out. I don't... social media as an ETF, that would be interesting. I'd have to think about it a little bit if I would like that, or if I would like to play the biggest up-and-comers. So I don't really like Twitter, for example. I use Twitter all the time, but there's a great article about Twitter. Let me see if I can find it, if it's still in my URL thing. Got it. Okay, So this guy, Josh Brown, he's on CNBC. I love him. Not everybody does, and that's okay. It doesn't matter. Here is Twitter since 2014 when it debuted. Is this price growth? Oh, that's not the chart I want. Twitter market cap. Anyway, I'm kind of confused because it doesn't list the price on any of these charts, but basically Twitter's price hasn't changed in the 8 years or so that it's been online, or excuse me, that it's been on the market. So, oh, here we go. $10,000 invested that day when they IPO'd yielded a total return 7 years later of $600, give or take. You actually lost money because the cost of living since 2013 is up a cumulative 15% or so. That's not the only reason I'm not huge on Twitter, but it's just, I don't know where it's going. I can't figure out where it's going. Like I said, I love it. If you're an investor and you can get past the bad corners of Twitter, it's great because there's a ton of people that just throw out stock ideas. They throw out their little thesis. And I don't know if you're going to find the next, 100x stock randomly on Twitter, but I find it, fun to sort through. I don't know what happens, and I don't know why you buy Twitter instead of, say, Facebook, mostly because Facebook, at least they have 3 different platforms, right? Or Snapchat, which I don't own any of those. Snapchat, at least you have the mega growth potential in there if they keep churning. So anyway, that's my 2 cents on Twitter. Somebody's JD stopping by to celebrate the FB upswing. Today, Morningstar upgraded to 4 stars. Hoping to catch lower valuation. Andy, Lordstown Motors seem very attractive. You know what? On Lordstown, too, this was part of my GM. I don't know if I put it in the video or not. GM has connections to Lordstown in the world of the factory production. So GM owns the Lordstown factory. I believe they lease it to Lordstown Motors. And they also partner on a couple technologies. You'll have to go read it yourself. But GM is not Tesla, and I'm not saying it is. But GM has EV potential. I really wanted to buy GM in the low 40s, and I'll tell you the reason that I didn't was because the debt was unbelievable. They have about $100 billion in debt, and I just couldn't handle it. So I backed off, but go back in my archives if you're interested. I did a whole thing about GM as an EV play. Most people didn't watch it. Most people laughed it off. But I think there's something there. It's not Tesla, but I think that there's something there. So Lordstown is in that loop. I can't figure out which one's better to own, Lordstown or GM. I would be prone to take GM because they're bigger. And if Lordstown does something special, GM will just buy it. But it's something to think about. All right, Lion 95. Canadian stocks, fair question. Canadian solar, I looked at for a minute, and I think that their ties to government contracts and large-scale solar production projects is good. And I stopped when I got way deep into end phase, and I chose to go with end phase. But Canadian solar, there's something there for sure. And then the JD comes in and says the Canadian cannabis stocks. I don't own any either, but I've seen quite a few people talk about that play. AMC is up 31% today. Guys, so the short sale phenomenon with GameStop and AMC, which is absolutely outstanding. Of course, it goes to Wall Street Bets and all that, and that's a great forum to entertain yourself with. But just the one thing I would say that probably would never happen to people like us who are just independent investors, but do be careful because some of that shit is illegal, man. Some of that, like manipulating the market as a team, and it's all public on Reddit. So I don't want to poo-poo the parade. Just know that I'm not interested necessarily in that. I find it legitimately entertaining, and I laughed so many times off Wall Street Bets. But just be careful because that is pure manipulation. And if somebody did, I don't know, if somebody in the FBI got bored or the Securities Exchange Commission, it could get bad. It could get ugly. All right. And Kyle asked about AMZ, which I think he meant Amazon. Let me go back. Sorry. So I'm in on Amazon, if that's what you meant. I just want to make sure that AMZ, you didn't mean something else. Okay, so it's AMZN technically, just to make sure we're all talking about the same thing. Did a video on that 2 weeks ago. I am targeting under 3,100 if possible. So what I'm hoping for with Amazon, and you saw that it happened November 10th, December 10th, and almost again on January 15th as it dips below 3,100. I'm not trying to get way too molecular on it, but it would be nice to get it under 3,100, and then of course holding for 5 years, or certainly a 3-year minimum. I think that it's undervalued considering their growth rate. If you go look at anyone's perception of their growth rate, it's plus 25% multiple years in the future. So that's my take on Amazon. Get a drink here. I got a transition. Okay, Amazon. Amazon has been going through horizontal growth. If you mean the stock price, I'm with you. If you're talking about dollars, though, I disagree. Stock price since July 10th, absolutely for sure. But there'd be a lot of people that would argue and say that horizontal line, considering the amount of money that they bring in, could lead to breakout potential. I don't follow charts in terms of momentum. I follow them in terms of fundamentals. And what I can say is since July 10th, Amazon's made a shit ton more money than, over that 6-month stretch. So it looked like their earnings are coming up anywhere between Jan 28 and Feb 1. And that should be a doozy. Danny, I have both Canadian solar and just started on Enphase. Nice. Better clean energy ETF. I don't even know what the options are. I will say that there is, between Enphase and all the other ones I looked at, the other one to take a look at was, starts with an E. It's popular. Maybe NextEra Energy sounds about right. I was very close to getting them. So, man, the thing about the ETF is there's nothing wrong with it, and I think that it goes up slowly over time. But that clean energy ETF for me would be in my retirement portfolio that I really don't fiddle with, that I just buy. I just buy and don't look. But in my retail account, where I talk about individual stocks, I'm much more prone to pick a winner. And that's not easy to do in solar. And if somebody asked me on the street, I would say, Next Era Energy was probably the safer play, but I thought Enphase has the most upside. It just is, some things are going to have to go very well for them. I think they can pull it off, or else I wouldn't have bought into it myself. Aaron Schill, GME Rocket, of course. That game, as long as you got the stomach for it. I certainly don't. LD Bed Bath & Beyond, spent $1,000 on it. Yeah, there's a good site for you guys. Let me see if I can get it here. That's not it. Short. Darn it. I have it bookmarked. It looks like it's from 1982. This is not it. High, short. Here we go. This one. I don't know if you can see the... Yeah, the way I've got this set up, I can't show you the URL, but it's highshortinterest.com, all one word. Here it is. Bookmark this, and twice a month, take a look at it for your own, even if you don't play the short game, just for your own interest. So twice a month, this gets updated per SEC regulations. You have to report your short interests on, I believe, the 15th and the 31st. So around those times each month, you should come look for the freshest data. And you can see the interesting part with GameStop, 138% short interest, Virgin Galactic, AMC's up there. LD mentioned Bed Bath & Beyond. So the thing is with these, what some people do is they look for high short interest stocks that they still believe in, right? And somewhere on that website, Rocket is on there. I still have it up. You can't see it, but Rocket, 34%. They were much higher, so they made it past a deadline of some kind. But if you do like stocks fundamentally that are on there, what you can do is play against the shorts, not necessarily in an illegal way, but just to go and get in there and say, these guys are wrong. I'm going to hold Bed Bath & Beyond. And the shorts bring this downward pressure on a stock because everybody reads that list and they're like, oh, must be something bad about Bed Bath & Beyond, right? They must have had a shitty Christmas season or something. But if you believe in them, eventually you'll outlast the shorts, and then the stock could really pick up from where its existing price is, okay? So just keep that, keep that website in mind. I have found it to be very reliable, and I recommend it as something to look at twice a month, even if you're not an advanced trader. I'm not. I'm a long-term investor. I'm much more of a fundamentals research guy, but it is really interesting to look at the short positions. And thank you, Aaron Schill, for the lunch. I appreciate that. Pablo comes in. Square and PayPal, love them both. Did not love Square forever, but have come around, mostly on the heels of Cash App and their recent acquisition of a banking license. So with Square, I'm doing my best to manage my cost basis in the sort of, if I could get it below 220, I would buy. I managed to get, I think, 205. Let's see where we're at today. It was down for a minute today. Yeah, a little tiny bit down today. But what was on December 29th, right before the turn of the year, it fell to 214. That's probably where I made my first buy. Just started out with 5 shares. Goal is to get to, over 100 at some point. I think I added 2 days in a row, and I was hoping it would get down to 210 again, just to make me feel really good in case there was a crash, a stock market crash, not a Square crash, right? There's two different worlds of crashes. So a 10% pullback in the market at large brings Square down to 206. And that has nothing to do with Square. Square can still be awesome. But it's a growth stock, and growth stocks fall much harder. And so that's why I kind of have this imaginary $210 mark. I have time. Unlike a day trader, I have all the time in the world because I can get in and I'm going to hold Square for a bare minimum of 12 months and more than likely closer to 3 years. So for me, a week is, nothing. And so that's what I'm targeting. We'll see. May not happen. And if it doesn't, I'll eventually suck it up and pay the price. But you're at a 300 PE right now. I don't think the forward PE is much better. Let me just take a glance. Yeah. They got a forward PE of almost 200 at 188. And I don't care who's growing what. That is a lot. Okay, when you're at 333, you cut that in half. Let's say they double their EPS next year. You cut that in half, you're down to 188, which is sort of the forward PE. You cut that in half, which now we're talking about 2022. You're at a 90. Okay, that's where Amazon is today. So I refuse in certain circumstances to pay for a stock that the initial fundamental returns are 2+ years away, right? And that's just my approach. I use 3-ish month windows to attack a stock. I try to find low days, add some, and try to cover my butt so that if the market does go down, I'm rarely in a negative position as a whole. Hopefully that makes sense. So there's kind of this element between not day trading, but always looking at stocks and yet still investing for the long term. All right. Thoughts on active trading. So that's a good one. Let me get a drink. Active trading in a Roth IRA. So I believe you're allowed to. And I don't know how active you mean. If it's day trading, I probably wouldn't do it. If it's doing what I do, which is, you've got a certain amount in cash always so that you can take advantage of opportunities and buying in there, as opposed to, say, depositing 20 grand and just buying everything on that day, then I would be for it. If active trading is day trading for you, or 30-day trades, swing trades, I don't know. I wouldn't, but that's just me. Probably also depends on how far away is retirement. My 2 cents there. CRISPR Therapeutics, will it keep going higher? Probably. That's a big ARK one. I stay far, far away from medical because I'm not that smart. So I can't. Have you ever read a CRISPR report? And it might as well be written in a foreign language. And I believe in what they do. And if Cathie Wood has done her research and she's remained high on them for multiple years now, I feel good about them. But that segment of my investing world is in ARK funds, which is approximately 15 to 20% of my IRA, right? So that's where medical goes. Cathie Wood picks it out, and it goes in there. And then the other side of medicine that I would have is the 20+% that I have in QQQ. So QQQ, if you hear people bag on it, they'll usually say, oh, it's just technology. But QQQ is the top 100 NASDAQ stocks. Is there a lot of technology? Yes, there is. Is there also medical and some of these genome things? Yes, there is. So look at QQQ and potentially ARK as opportunities to invest in the sectors with knowing as little as I do about medicine. Let's see. Square have been sinking. Yeah, but I just went, I just told you where it stands on the multiple, right? The only thing that's sinking is the amount of people willing to pay 300 times earnings has apparently reached its limit. Not too optimistic of PayPal. I will say, so I'm huge on PayPal, so I disagree over the long term. What I will say, though, is, yeah, it's right there with, not as bad as Square, but it's run up quite a bit, too. So they have to come in strong with Q4 earnings or that stock will pull back. Thomas on Smile Direct. This is good. I like Smile Direct. I'm still in it. I was lucky to get in at $7.50. So it's very easy for me to hold long. It does appear that the next 3 months are going to be, call it now through, let's just go through Easter, whatever date Easter is this year. They're continue to struggle with COVID, which is surprising considering how well Line Technology is doing. However, Smile Direct as a whole I think is a solid long-term investment. But you are seeing it trickle down a little bit right now. The interest level in it is not as high as it was when it was trading under $10. And I would honestly expect that to continue. I think that for me, what I'm kind of looking for is let's just call it the Q2 earnings call. What will they say about the summer months? Are they seeing an uptick in appointments? Are they seeing an uptick in interest? Will the, stimulus, will that spark people to get back in the game? I'm very cognizant of the fact that your looks and appearance right now doesn't matter, right? Because we're not going to parties. No one's going to special occasions and weddings and crap like that. That world seemingly returns in summer. And at that time, I think Smile Direct has a lot more demand. I'm holding long and strong. I will be in that stock until at least 2022. So bumpy road ahead. If you're a believer, get in now because I do think it has a bright future. And I would go on the record as saying, assuming it's at $11 or so today, I do believe that stock can double to $22-ish by 2022. So I'll put it that way. Andy, Microsoft are great. Yeah, I got Microsoft's on my list. I haven't talked about it in a long time. I'm hitting some of the big dogs. You guys probably noticed, like Facebook, Amazon. What else did I do? Apple, because of earnings coming up, and Microsoft's on my list, so it's coming out eventually. Cheeto, how do you like NEO? I don't invest in Chinese stocks, so I'll just leave it at that. But congratulations to everybody who got in on that. What a run. But, it's not one for me. I got PayPal at 190. So Danny is right where I am. I think I'm at 189. Would like it to come back down to buy a bit more. I'm with you. It's grown into my second position. I mentioned on my Visa video yesterday, Visa from a dollars in standpoint is far and away my number one, but PayPal has less money in it, but it's growing to a point that it'll probably be my number one holding without any further investment. So I'm huge on it. Andy says, if Microsoft drops below 200 or 190, yeah, I would agree with that. I don't know who sells Microsoft if you're a long-term investor. I mean, worst case scenario, if you have Microsoft, or let's just say you have $10,000 on Microsoft and it's keeping you back from investing in other things that are attractive to you, I mean, I would sell whatever my gain is. So let's say you had the $10,000 in it today. You started with $7,500 and now it's $10,000. sell $2,500 worth and go buy the things that interest you. But there's no real rational reason to sell Microsoft over the next 5 years unless it's holding your portfolio back from diversification. And I would probably, like if it was my son or something, I'd probably press him harder and say, if you want to diversify outside of Microsoft with your 10,000, why don't you go get some more money somewhere? Why don't you leave Microsoft the way it is and go get some more money? Because that's really how you're going to grow your net worth in the long term. So that's just my 2 cents on that. Invite, Pablo says, Invite, so yes, that's Genomics, so it's right there with my stance on medical. I'm not smart enough. I trust ARK will be smart enough, and that's represented in my retirement account. Piyush, thank you for great content. Neo and Tesla, I've covered it a couple minutes ago. EV stocks are not my thing right now, mostly because they're overpriced, in my opinion. If you want to get in on something smaller, or you want to look at like a GM or somebody who hasn't run up yet, that would be my target if you force me to invest in EV today. Aaron says, if Microsoft hit 190, I'm throwing everything at it. Tattooed Chef. This question was up on a comment the other day. I'll tell you what, this alternative food world is very intriguing. Me personally, I struggle with it because I don't eat any of it. I'm not a vegetarian, vegan, or whatever they're made for. That doesn't mean that it's bad. It just means that very hard for me to go to a store. I'm not doing it every day, right? I don't have to go down the frozen food aisle and choose between Tattooed Chef, Beyond Meat, etc., and go home and taste it and say this one's so much better. So without that insight, it seems stupid for me to invest in it, so I've backed off. However, there's no denying the demographic stats or whatever, the core market stats that say this type of food is trending in the right direction. If it were me and there is Tattooed Chef, Beyond Meat, and Incredible Foods or something, those are the 3 names that I recognize. I would spend a lot of time and I would pick one and go from there. So that's my advice. Not which one to pick, but put all your chips on the horse you think will do the best in the long run. Consumer packaged goods is no joke as far as competition. Go to your grocery store, and even outside of vegan foods, go to your grocery store. The competition for any of that stuff is nuts. Think about potato chips, just for a stupid example. Go to the potato chip aisle and look at all that competition. Like, it is maddening. So find the Ruffles or whatever, the Doritos of this type of food and bet everything on it and see how it goes. And I think a lot of the time that I would personally spend on a stock like that is outside of fundamentals and investor reports. I would be on every alternative food blog forum that I'm aware of, and I would be seeing, like, what do people really think? How much are they buying? I want to see people with refrigerators full of this shit. I want to see Beyond Meat sign a deal with a stadium to provide, hot dogs, burgers, whatever they're doing. Like, that's where the money is getting into those high distribution outlets. Selling one box of cauliflower pizza every 5 days is not a winner. You have to get into the distribution point. So that's just some free advice on jumping in that market and the stuff that I would look at. Dogecoin, no idea. I have my Bitcoin trust and I'm out. And then the rest is up to PayPal and Square, which I tout as a great Bitcoin related, crypto related alternative investment. If you're like me and you have no interest in $20,000 worth of Bitcoin to be on your phone, because phones disappear and people forget stuff, just buy Square and PayPal. And I think that you'll be a part of a market that runs up, and you'll be protected from a crypto market that deflates, if it does. Ford, I'm holding at 490. Mach-E and Bronco. So I couldn't agree more on Mach-E and Bronco. Let's take a look at Ford for fun. Time is it? It's 3 on my time anyway. That's not it. All right, so you're in at $5. It's up to 10. I like, let's see the 1 month. So you're in a nice little run up. Probably the question is, how much higher could it reasonably go in the next year? I'll give you my 2 cents on that. In 2019, their EPS was $1.19. The assumption is they'll land at negative 3 cents, probably because pandemic crushed car sales, right? You got $1.03-ish for next year. You got a couple exciting catalysts with the Bronco and the Mustang coming out. I don't think that Ford is in the same position that GM is in. However, if they did hit $1 EPS, you know, that's a pretty good P ratio at 10. So if they hit the $1 and you saw life out of the E-Mustang and the Bronco, which I think the Bronco is a no-brainer. The only risk in the Bronco right now is you just hope to hell there's no recalls, right? And same with the Mustang. So if they hit $1 next year, or they're progressing towards that, and you're at 10 today, it does feel like a $20 price point in the next 12 months is realistic if everything goes right. So that's my 2 cents. I would say there's an easy 15 in there over 12 months, and there's potentially a 20. Just for kicks, let's see what TipRank says. If you want to hear from somebody smarter than me. All right, ignore this, right? Let's go down to one month ago. These guys are saying 11 and 12s for 12 months. This one's 8 days ago. Ford raised to 12. Try to find a good article. I don't know, that seems light. I feel like Bronco hits. Excuse me, I feel like if Bronco hits and the Mustang, like pre-orders and all that stuff go nuts, I think you got momentum, and 20 is not out of the picture. You know, TipRank says differently, so those guys get paid to do it. I don't, but that's my 2 cents on it. Okay, Pablo, thank you for the super chat. You reviewed Mercado Libre, but curious if you had fundamental analysis updates. Seem like market cap has plenty of room to grow. It does. And did you notice after my fundamental analysis, that thing went to the moon? Or it went up to 1,800. Is that where we're at? Mealy. Now you're at 1,900. So somewhere in my video, I think it was around this time in the 16s or so, then it dipped and now it shot back up. So I have two fundamental problems with Mercado Libre, but they are not like necessarily bearish. Number one, you're not making a profit yet, which is fine. But it's been a while, right? And they're still not making a profit. And then the second thing is I worry about the expansion and the economic conditions of the countries that they play in. So, Cuba and Ecuador and stuff like that, they have the best chance to win. They have the best chance to win there. It is not an easy market to distribute packages to. And as I read into their investor materials, it appears that they have separate websites for each region, which isn't by itself a bad thing. But the super mega win is bringing all that together. And so that there's one Mercado Libre site that, you're flying, your marketplace expands to other countries. It's sort of like if you could expand to Europe, if you could bring all of Europe together, for example. So they have a lot to be excited about, Pablo. They really do. That system of running a marketplace, what else did they have? They have a monetary exchange system, or a sort of a currency almost. And then they have the building of a shipping and distribution line that is very, very impressive. And I think that they are reaching a point now where it'd be very difficult for somebody to beat them in that market. I just worry if one of their core countries has an economic collapse of some kind, or their currency goes down, it could be really bad news. But I'm waiting for bad news, right? It probably makes more sense to invest for the bright things, and Mercado Libre certainly has that. Just for fun, we'll see what TipRank says. Just so you have somebody else's opinion besides mine. Let's look for fresh. So 15 days ago, now these guys are coming in, 2100 from Merrill Lynch, 1950 from Jefferies. So the sentiment has changed. I don't know if it's changed a lot in 15 days, but there is some reason to be excited. Just if it was my money, I would keep it capped at about 10% of my portfolio. So that not because it's bad and not because it can't grow, but because I do think that there's some outside risks on that particular region of the world that you can't always count on business being normal every single day. So hopefully that makes sense, and hopefully it helped you. Couple more here. JD Intel made 25% plus yield investing, and they still have more upside, yeah. Ford going to sell a ton of Broncos, I agree. Bronco, I've been LMT for a while, concerned about cuts in the future. I don't know what LMT is off the top of my head. Gotta look that one up. Either that or I'm just forgetting the ticker. Oh, Lockheed Martin. Yeah, one thing to watch out for with Lockheed Martin is just the transition to a Democratic administration, and sort of theoretically, Democrats don't support Army type spending, wartime, or war type defense spending is the word I'm looking for. So just be careful there. I would be watching your headlines every day and just make sure that they're not losing contracts and stuff. George says, I'm 21, look to invest $200 a month for the rest of my life. What advice would you give me? If that was me, I would be in the QQQ and the and ARK, some version of 50-50 or something like that. The world changes every day, but I think that the QQQ is the less risky of the two, although ARK's bets have been pretty solid here lately. So that's my 2 cents. I wouldn't fiddle with individual stocks at $200 a month. I would definitely go maybe a 3-way split. You're young enough at 21 that it should be all stocks, in my opinion. And I would do, it looks like if you're in a different country, I'm not sure if you can even do these, but it might be interesting to do QQQ, ARK, 3333, and then a dividend ETF on top of that, just to have dividend exposure. So no matter what happens, you're getting a couple bucks out of it. But, the world's your oyster at $200 a month for the rest of your life. The world's your oyster. I would not do individual stocks because it'll really discourage you if it goes down. So my 2 cents. I'm in tech. I read 10K. And don't know which stock we were talking about there. Top 5 long-term high growth stocks, 5 to 7 years. Good question. Growth rates after 5 to 7 years are really, really hard to project. I think you got to get a FANG in there. Absolutely, for sure. Pick your favorite. I would lean more to Google and Amazon myself, but pick your poison on which one you think will have less regulation as time goes on. And then from there, there's all kinds of games that you could play. There's stuff like Square. You probably do want to have a fintech in there somewhere, and Square at long term, Square probably does outpace PayPal, assuming they stay on the same trajectory. And then from there, I don't know. Top 5 is hard. There's risk in every single one of them. I really like the idea of, in my personal IRA, it's all ETFs. So I'll leave it at that. And I don't know if there's a stock in my portfolio that I would sit here today and say, I will have this 7 years from now, because I know, excuse me, I know that eventually the growth rate's going to dry up. It's just the way it goes. Google will eventually be a dividend stock, right? Apple will eventually be a dividend stock, and they won't be sexy anymore. So I would lean towards ETFs myself, and as a matter of fact, that's exactly what I do in my retirement account. In my retail account with individual stocks, there's no assumption that any of those will be there 7 years from now. It'd be great if they were, but the main goal is to maximize profits after 12 months, hopefully by 3 years get a no less than double. And then in 5 years, if I were to hold it that long, it would probably have to double again. So hope that helps. All right. Guys, I think that's it. Channel community Discord. I'm trying to work on something to do. So I don't want to have stuff be expensive. I'm trying to come up with something for a community that kind of can compensate for time, but also be wildly inexpensive for everybody who wants to participate. So I'm thinking about it. I just haven't decided. I don't want anything that's going to cost people a lot of money, but I also want it to be private, and I want it to be, I want it to have some sort of cost of entry, only because it keeps a lot of spammers and people who aren't serious about it, just keeps them out of the conversation. So more to come. We'll see. I'm not in a big hurry. Plenty of work to do on the channel. Okay. All right, guys. Hope you enjoyed this. I'm going to try to do a couple every week, maybe again on Thursday. So if you're wondering about the next live stream, it'll probably be on Thursday. New video tomorrow will likely be either Intel or Microsoft, and then we'll go from there. So Really appreciate everybody joining today. Have a good day. We'll talk to you soon. Bye.